They didn't just take your house, they charged you extra for the privilege. Welcome to Wells Fargo, the bank with more scandals than savings accounts. Right now, a new wave of lawsuits is crashing through the courts, accusing them of wrongful foreclosures, fake appraisals, and pandemic-era fraud. This isn't a clerical error, it's a business model. Families were struggling, and Wells Fargo saw an opportunity. Now the truth is leaking, and the floodgate is wide open. You trusted a bank with your home. They gave you foreclosure notices, fake appraisals, and a legal mess you never saw coming. Welcome to Wells Fargo, where the paperwork is always missing, but the damage is very real. Let's rewind. During the pandemic, homeowners across the country applied for forbearance, thinking they were safe. The government said, "Pause your mortgage, stay afloat, survive." Wells Fargo said sure, then secretly enrolled thousands of customers without consent. That's not relief, that's entrapment. Some people didn't even know they were in forbearance until they applied for a loan or tried to refinance. Denied. Why? Because Wells marked them as delinquent, even when they were current. That's like pushing you off a cliff, then billing you for the fall. But it gets worse. Former employees say the bank inflated appraisals to trigger higher payments, then used those numbers to justify foreclosure. One lawsuit calls it systematic theft of equity. Another says Wells Fargo targeted Black and Hispanic neighborhoods the hardest. This wasn't just business, it was predatory and it was personal. And now, the lawsuits are coming back like a boomerang. California, New York, Illinois, homeowners from coast to coast are filing claims. They're alleging racial bias, illegal fees, and deceptive practices stretching back years. The same Wells Fargo that paid billions in fines in the 2010 is facing the music again, and the tune sounds familiar. The company's response? The usual. "We take these matters seriously," followed by a wall of silence and some carefully worded PR. Meanwhile, families are living in motels, credit scores are wrecked, and the people responsible are cashing bonuses. Let's talk numbers. In 2023 alone, Wells Fargo settled for over $3 billion in mortgage-related claims. That includes fake accounts, junk insurance, and wrongful repossessions. And still, they deny any wrongdoing. They just regret the confusion. But this time, it's different. Whistleblowers are speaking up. Internal documents are leaking, and federal regulators are circling again. The Consumer Financial Protection Bureau is watching, and state attorneys general are sharpening their knives. This isn't just cleanup, it could be a reckoning. Because here's the real question. If Wells Fargo is a repeat offender, why is it still allowed to operate like a normal bank? Why do executives keep skating by with golden parachutes while their victims drown in paperwork and penalties? This isn't just a mortgage case. It's about power. It's about what happens when the gatekeepers of wealth weaponize that trust, when a system meant to protect homes becomes the reason people lose them. And here's what makes it personal. Imagine you followed the rules, paid your dues, asked for help during a crisis, and instead of support, you got deception. Your home was taken, your equity was drained, your future torched by a spreadsheet error with a human cost. Wells Fargo called it an oversight. The courts may call it fraud. And if these lawsuits succeed, Wells could be forced to pay out hundreds of millions more. They could face new consent orders, tighter oversight, and a permanent stain on their mortgage business. But if they win, if they settle in silence, if they walk away with no real consequence, then what message does that send? That banks can fake the rules, break the rules, and still write the next set of rules? We're not talking about one rogue employee here. We're talking about patterns. Patterns of abuse, delay, denial, and destruction. Patterns that hurt real people. So, here's your closing argument. When the people trust a bank with their homes, that bank has a duty to be honest, to be accountable, to not treat working families like profit margins. But when that bank chooses profit over people, when it lies on forms, manipulates data, and hides behind legal teams, it's not a bank. It's a predator in a pinstripe suit. Wells Fargo didn't just mess up the paperwork. They weaponized it. They didn't lose homes by accident. They took them. And now that the truth is coming out, it's time for the courts to do what Wells never would: deliver justice. Because if we don't hold them accountable now, they'll just keep writing new ways to take what's yours. So next time a big bank says, "We're here to help," check your documents, check your equity, and check your back. Better call Saul.